for lack of a better word, is good. Read it right. Read works.
Hello everyone, and welcome to episode 11 of Let's Play Wall Street Raider. I'm RakeM, your host. In the last episode, we went from almost $10 trillion down to 9.1, I guess, 9.2. And most of the reason why that is because we paid a lot in taxes and we invested a lot of new money into stocks where we oversaturated the industries that they were in with new assets. So their projections in the near term are for either losses or flat earnings. And so their stock prices have kind of shriveled a little bit. And so haven't realized any profit from any of those yet. But it's nothing to worry about. We're gonna make it back over the next couple of quarters. But I looked at the episode 10 that I did, and I realized that I was doing something kind of stupid. In that you guys are watching these videos to know how to be successful with this game and how to turn a little bit of money into a lot of money as quickly as possible. And I've kind of been dodging a question that really needs to be answered. And that question is, what's going on with the commodities behind the scenes? So what I've been doing, or what happened in the Let's Play that I did for 7.6, is that all of these commodity trades wreaked havoc on all of the counterparties that were taking the opposite side of the trade. So when we buy futures of silver, the counterparty is basically selling it short at the same time, right? So it's basically like betting on the flip of a coin. I take heads, they take tails. And one of the problems with that is that in the last version that we did, 7.6, when a counterparty started losing money, he didn't close his position. These companies were basically dummies. They were not very smart about how they managed their commodities and stock options positions. The game was only reviewing whether or not they were making money or losing money, but they were only just reviewing their position and reevaluating their position on the day that they declared their earnings. So only 4 times a year would these companies review their situation, which you and I both know in the real world would be disastrous. If you have let's say you have a company that's worth $50 billion and you've invested $5 billion in a commodity, and commodities are leveraged at 19-1. So a $5 billion investment in a commodity is on a total value of $100 billion, which is twice the amount that your company is worth, right? So if you're only reviewing that once a quarter, what happens if you declare earnings today and a month from now that asset is worth half what it was, right? So it's costing you not just 10% of your company's net worth. It's now going to 20%, 30%, all the way up to maybe the entire value of the company. And so that was the problem with version 7.6. And after we finished our Let's Play, Ronensoft revised the simulation to where it reviews all of that stuff on a more frequent basis. And that more frequent basis, I think, is every 2 to 3 days of calendar time, depending on several different factors. For instance, what industry they're in, what their credit rating is, etc. So every 2 to 3 days, the simulation now reviews, all these companies that are uncontrolled and just simply governed by the simulation software. Every 2 to 3 days, all those positions are reviewed, right? So I've been staying out of these commodities. I've been ultra conservative lately because we've taken so much money out of the market as a result of these trades. And it's time to answer the question, are we, by conducting trades in the commodities and stock options, are we driving the size of the market down, or does it not have any effect at all? And it's time that we answer that question, because if it's not really affecting the market, we don't need to be conservative. We can go ahead and take advantage of every opportunity these commodities give us, right? So in the last episode, we bought Goldcorp, GG on my list here, and we had him sell short silver at a I think around $40 an ounce. It was like the high 39s or something. Here it is. Yeah, high 39s. One was over 40. And the full amount, 50,000 contracts total, right? So if the other side of this trade, and he's making money on it because the price is all the way down under 30 now, right? So if he's making money on them, then the counterparties all lost money. And the question is, do they still have that position? Or are they driving themselves further toward bankruptcy as a result of holding on to it? Right? So I looked through this entire list of who owns what to try to find whether or not the counterparties still have their positions, and it's just not here. There's no counterparties or no other transactions for the opposite side of that trade. You know, there's no company with 10,000 contracts on a long position, right? And up here under BP sold short oil, 500,000 contracts when the price was headed down. We bought it was around $151 a barrel, and they gave us a nice premium on it at $190. But the price of oil went down into the 140s and then went back up to where it is now, right? And the only counterparty that still has the other side of that trade is Honda Motor Company. He still has his. And the reason why is because even though he lost money initially, he had a decent credit rating and a lot of cash on hand, and so he wasn't forced, or he decided to weather the storm, and it's paying off for him because he's now up, I think, to the tune of about $35 billion. And only if this price goes down will we get that back. But anyway, what this tells me is that we can trade as much as we want in these. And yes, it'll have an effect, but it won't be causing, hordes of bankruptcies like it did in version 7.6. So what we're going to do from here on out is we're going to be engaging in every commodity trade that we think is going to be profitable, starting with the fact that gold is all the way up above $2,000 an ounce. So we need to sell that short, and we're going to have Gold Corp do that because he's in that industry and it'll go toward operating income. And again, it's giving us a nice high premium on it. All right, so we got the full amount there. And wheat and corn we can sell short as well. And I want to spread the wealth around, so I want to take some other companies that haven't been engaging in commodities trades. So for instance, Dayton Hudson here, we're going to sell short wheat. Alright, so he's got the full amount, and let's also sell short corn. And we will have GE sell short the corn. Alright, so that's the full amount there. And look at that, gold has already dropped to 1,500. I wonder if we went and looked if the counterparties would have already sold off their deals. It's September the 13th. And Gold Corp, where is he? Here he is. Alright, so he's got 3 that are 10,000 each. So what we will want to look for is gold, 10,000 contracts, and long position. And there's none on here. Well, here's one. Time Warner. Time Warner still has it. But I don't see any others on this list. Long positions on gold at 10,000 contracts. We've got a bunch of small ones. Okay, so 35.67. America Online might be another one. Yeah, right here. So out of all of these, this one and one of these is still in effect at our counterparties. But I bet if we fast forward to like the 15th or the 16th, those will disappear. All right, so we'll go back and look at it here in just a minute. But basically, I don't see any reason why we can't continue to trade in these as a result of looking at that and realizing that the counterparties are selling them off. And incidentally, the way that works in the real world is once the commodity trade is placed, you no longer have any tie to your counterparty. Your trade is with the options exchange or the commodities exchange, and so they can sell theirs off and it doesn't cancel yours, and that's how it works in the real world, and that's how it works in this game as well. So the hope is that when we engage in these and our counterparties start to lose money and we make money, that they will close their positions right away when it starts to hurt their credit rating so that they don't go broke. Because that was a big problem in version 7.6. It was a huge problem because we ended up with so many assets in the game and we couldn't sell the companies off because doing so would create just all kinds of havoc and reduce the number of opportunities that we had on buying and selling stocks because the industries would shrink. Any company that we sold would become a counterparty on future commodities trades. And since they were being so stupid about the way they evaluated those positions, it would basically drive them into bankruptcy 100% of the time. So by selling off any of our stocks, we would immediately be reducing the size of the market by 50% of them or more, industry by industry. But I'm happy to say that that's no longer the case. It's much, much smarter now in how those companies operate. So anyway, we're going to be mostly this episode. We're not going to be really dealing with our stocks, but before I talk about what I am going to be doing, let's go ahead and review where we are. I have updated my spreadsheet. We now have a total of 30 companies, 27 up here, and then these 3 down below. And we have added like four companies we targeted, but we picked up several others along the way. We haven't looked at them yet, and we need to, but we're probably not going to get to them in this episode. What this episode is all about is how we're going to be structuring our companies, and also getting a handle on commodities and credit. Right? So primarily the reason why the main company that we're going to be using is RakeM Insurance. And the reason why we're going to be using him is because there is sort of a restrictor plate racing type apparatus at work here, in that when the index grows faster than the GDP growth, a portion or some kind of calculation kicks in that drives up the prime rate. Right? So when there's excessive expansion beyond what's expected, the interest rate hikes up to try to keep some kind of control on how fast everything grows. All right. Now, with the kind of trades that I do and as quickly as I build wealth, typically I suffer from long periods of high interest rates. Right? And on insurance companies, always do better during periods of high interest rates, and banks do worse, much worse during periods of high interest rates. They have higher default rates. They have higher percentages of their consumer and mortgage loans that they have to write off every year. So that's why this time I'm using an insurance company as the primary parent for all of my subsidiaries, whereas last time in version 7.6 I used a bank. But now, knowing about that particular piece of the equation, where it will actually drive up, our success will drive up the interest rate. We're going to be using the insurance company as the parent so that, we do better. But the other thing is that we're going to be, by continuing to do these trades in commodities, we're going to be coming up with cash all of the time. And we're going to have more turnover in the commodities than we do in our stocks. And so where we're going to be rolling that money into is into buying up loans and controlling credit, buying mortgages, buying consumer loans, and stockpiling the cash in those places until we have stocks to invest in. So when we sell these companies off, we're not going to be buying new companies of the same size. They're going to be the market leaders in most cases. So we're going to be buying up the teeny tiny little fish, giving them a bunch of money and having them grow like crazy until they take over as the industry leaders. Right? Well, that cycle is about a 2-year cycle, whereas what we're doing with commodities is usually like a 2 to 3 month cycle, if that. These things are so volatile, going up and down every month, that we can make just tons more money off of these than we ever will off of these. All right, now that presents a problem in that you're taking a lot of cash out of the market, and you have no place to put it other than business loans, consumer loans, prime and subprime mortgages. And so that's why RakeM Insurance and the bank are going to be the parents, because we're going to be doing a lot of extraordinary dividends starting probably the next episode and moving forward. And right now we have a ton of cash, and it's causing a problem for the bank in that he has more money in cash and it's not invested anywhere, and he's paying interest on this. Right? So we have to find a place to put this money where it can earn interest so that the bank doesn't lose money overall. Right? So right now he's projected to lose 74 cents a share because he's paying more out in interest on this cash than he's making on these investments. Okay? So what we're going to be doing today mostly is buying a lot of loans. And I wouldn't be surprised if with $5 trillion we couldn't buy at least half of the loans that are out there. Okay, now we're going to be as smart about it as we can in that we're going to be buying basically all the loans that are BB credit rating and lower. So ideally I would go through and just buy all of these all at once, and we would fast forward and just cut it in the middle so that you wouldn't have to watch everything. But we have a lot of commodities that are active right now, and so we have to keep an eye on these. So as soon as something is priced to where we need to make some kind of decision about buying or selling. Oops, I hit the wrong thing. So let's buy business loans. Yes, I want to select, and yes, I want to buy credit rating. Okay, so here we go. So what I'm going to do is I'm going to buy basically everything on here, from Dollar General stores all the way down to the bottom, including all of the D-rated ones. And that's basically what this episode is going to be like for the next 20 minutes or so, I think, where I'm going to buy a whole bunch of loans, and then we're going to come back and do a commodity trade, and then I'll go back to buying loans and do a commodity trade, and et cetera, et cetera. So over the next however long, that's what we're going to do, first of all. And second of all, we have sold short Bank of America, which has a symbol of BAC. And if we buy up all the loans that he has and leave him with no business loans, it should cut into his profits. Now, it'll probably help him in the current quarter, but after that, his income will go down. So in addition to everything from Dollar General stores on down, we're also going to buy every loan that Bank of America has. All right, but I will come back and we'll go through that, and I'm going to talk about a few things while I'm doing that. I'm going to start buying some loans, and I'll be keeping an eye on the commodities, and as soon as something needs to be done there, I will come back and we'll talk some more. Okay, so silver has gotten all the way down to 1657, which is right around its baseline price, or the lowest that it's been for quite a while. Hasn't generally gone below that for any significant period of time. So we're going to sell off our futures of silver. We're going to buy physical silver and buy futures of silver as well. Actually, I think that was the gold. Silver. We're going to make over $1 trillion on these. All right, so now let's buy physical silver. And we still have $1 trillion, so let's buy futures. Okay, so we've sold off all of our silver futures. We've bought physical silver and silver futures. Gold is now below 1,000 an ounce, so we'll also sell off our gold. Buy physical gold and buy gold futures. And it may take quite a few transactions, given that the counterparties that are available are not able to buy 10,000 contracts at a time. All right, so let's buy physical gold first. And now let's buy the futures. Alright, well that wasn't so bad. We got 50,000 without too much trouble. And corn has gone down to 6, but we want to try to see if it'll go down to 4 before we cover our positions there. I think I'm going to go ahead and buy physical gold. Should I buy silver as well? Yeah, let's buy silver as well. I had to borrow money to do that, but we're going to make it back. And does anybody else have a whole bunch of cash that we want to use to buy gold with? BP does. Gold Corp already has it. So BP, Dayton Hudson, and General Electric, they'll all buy some gold. But these guys would have to borrow. Let's just have BP do it, and we'll do like 25,000 contracts. Okay. Anybody else? Maybe Dayton Hudson. Okay, that's enough. All right, so let's go back over to the bank. He's down to 2.7 trillion now, but we're about to come into a lot more cash, so I am going to go back to buying and selling loans. And basically, to get down to the bottom of the list without having to scroll, you hit the end key, and that takes you to the bottom of the list. And you just double click the one that you want. It's very simple, very easy to do. If you have it sorted alphabetically, or maybe even if you don't, if you hit the letter of the name that you wanted to start with, so if I'm just hitting the C, right? So like if I wanted to go to Dollar General, I just keep hitting D until it comes up. Did I go buy it already? Oh, I bet I bought it already. That's what it is. Right. But anyway, you get the idea. That's a shortcut you can use to get down to the companies that you want. Especially helpful if you have it sorted by alphabet. All right. So anyway, at the end key, double click. And just basically every time our turn ends, we're taking a look at the commodity prices to see if there's anything that needs to be done. All right. So I'll fast forward now and I will be back. All right, so corn is all the way down to 450, so we're going to cover GE's positions on that. But before we do, I just want to check and see how much cash RakeM has. I guess he's got a lot because of what our companies are making off commodities. So we still have a lot more loans to buy. We may buy more than what I originally planned, but we'll see where we stand once we get done with all the BB rated ones and lower. Let's go over to General Electric and just cover all these corn futures. All right, so it's gotten all the way down to $3.75 a bushel. So it's time to buy futures and physical corn. And we will have a whole bunch of them. Buy physical corn if we can. But first we'll have GE buy futures. All right, so who do we want to buy physical corn? Let's go to the most cash list and see. Definitely want to have Cabot buy it. Goldcorp, BP, and Dayton Hudson. GE already has it. So Cabot, Goldcorp, BP, and Dayton Hudson. And that's as long as it stays under $3 or $4 a bushel, we'll buy corn. All right, who was the other one we said? Okay, Goldcorp. Goldcorp. I guess the price shot up because we paid more than $200 billion for that. And wheat looks like it's going back up again. The question is, do we want to cover that now or not? Who is it that we had buy wheat? Or sell short wheat, I guess I should say. Dayton Hudson. So let's cover these. It would be nice if it went down to $5 a bushel or whatever. And if it does, we will buy it and buy futures as well. Nice to see crude's finally on the way down again. I'm kind of surprised our index hasn't started growing. But anyway, so we're going to go back to the bank. We just got $2.5 trillion, and we will just go back to buying loans. I'll keep an eye on wheat. See if we want to buy it. And if we do, I will come back. Okay, so corn got all the way up to, I think it was about 9.25, and now it's headed back down. So we need to cover our positions on that. So I think it's GE that we had sell it short, or excuse me, buy it. So we'll cover these. Of course, as I'm doing this, it goes up even higher, which is fine because we have physical corn to sell off too. And so does BP. Dayton Hudson. Who else? Cabot, I think. And did Gold Corp have it as well? Yep. Dropped in a hurry. Now I don't know if I have any or not. Nope, just gold and silver. And they drop so fast, I don't want to sell it short at this price. I mean, unless it gives us a huge premium. Let's see what it's going to offer us. Yeah, it's really not. High enough. So silver's kind of been stagnant. It's hovering between 17 and 20. Gold's between 1200 and 1350. And spot crude is still on the way down, but it's not quite as volatile as it has been. Our index continues to drop little by little, but we're going to hang on to it as well. So that's all we need to do. Let's just double check and make sure we're not missing anybody. Okay, gold, no, there's no corn at all. No corn, no wheat. So we have nothing in corn or wheat. We haven't bought any oil, so Gold Corp has gold and silver. Dayton Hudson and BP both have gold. As far as futures go, BP still has oil. Gold Corp has gold and silver. And the insurance company has the index, and that's it. Okay, so what we need to do is just wait for these to drop and then keep an eye on these three. Not really worried about the index too much. Alright, so let's go back to buying more loans. And basically we're going to just keep going. There's a lot of BB rated loans. And when we get to the triple B, we'll take a peek at how much cash we have left and decide just how much further up this list we want to go. Of course, we'll probably buy the Bank of America loans first. All right, so we'll fast forward and I'll be back in just a minute. Silver has fallen down to $15.50 an ounce, so I would like to buy some more physical silver. I'm going to buy silver. I don't think I have any. Okay, I do. Never mind. So let's go to Cabot Corp. And we will buy silver. Let's go to VP. He has enough money. Let's buy another 25,000 units. Oh, I guess he didn't have any. All right, who else? Hudson, maybe. All right, so all he's got is gold. So let's buy some more silver. He's got to borrow, but that's fine. That helps the bank use up his cash. Let's see, who else can we do? Who else has a lot of money? Toyota, maybe? He's got plenty of credit. Let's have Toyota buy silver also. I have to borrow $666 billion. That's okay. Let's see who else has cash. GE has cash. Gold Corp. But I think he already has silver. That's pretty much it. Let's see what General Electric has here. Okay, he has nothing. So let's buy some silver. And I guess that's it. Let's go back to the bank, see how he's doing cash wise. Okay, so we've taken him all the way down to $84 billion, and most of that's because of how much money we just spent on silver. So basically we can't buy any more loans until we sell off some of our commodities. So while we're waiting for these to get to their target prices, let's go through our stocks and split everybody that needs to be split down to the $30 level, $30 to $35 level. So anybody with a stock price above $60, we're going to split. Oops. All right, now that we've split all of our stocks, we're still waiting for gold, silver, and oil to reach their target prices, along with wheat and corn to drop to where we can buy some more of it. So what I want to do now that I've split everybody is I want to update my spreadsheet. So I'm going to save my game, and I am going to pause the recording and update my spreadsheet, and then we'll look at how we want to structure these companies. One of the things that I want to do is I want to take TMFI and merge it into RakeM Insurance. I also want to think about how I'm going to unravel all of Cabot's subsidiaries, whether I want to spin them off or if I want to have the insurance company buy them from Cabot, or just what we want to do. I also want to look at any companies that we might want to buy options on. Okay, so I'm going to pause the recording now and update my spreadsheet and look at all of that stuff. And rather than bore you with all the tedium, I will just come back and explain what I've found. And we're back, and I have updated my spreadsheet. And after looking at how long we've been running, I think I'm going to save the structure stuff, how we're going to structure everything and how we're going to deal with Cabot subsidiaries. We're going to deal with all that next time. So this time we're just going to try to make as much money as we can off commodities and options. And to that end, there are 3 companies that are trading at less than their net worth. And they're not so large that we won't have, or that we'll have trouble finding counterparties. So the largest of the 3 is BP, second largest is Dayton Hudson, and the third largest is Southern California Ed. And it's just a matter of who we want to buy the options. And the company with the most cash right now is Gold Corp, so we're going to use him to buy those options. And since it's kind of time critical, I'm going to go ahead and start. We're going to be buying options on BP. Only 4% of BP is publicly traded. So we'll be buying them at 4% at a time until we run out of counterparties, and then we'll reduce the percentage rate until we just can't get any more. We're going to buy calls and sell puts. We may not get to the sell puts part if we run out of counterparties. We'll just have to see how it goes. And actually, let's be on a secondary slot here. Alright, so I'm going to fast forward while I buy calls and sell puts on BP. I'm going to make them all for $40. And I was kind of surprised that we could get counterparties for a $7.5 billion trade. But we can, so we're going to do it. Fast forward and I'll be back in a minute. All right, I'm going to interrupt this for just a second. Wheat has gotten up to almost $11 a bushel. I am going to sell off my silver and sell short wheat. And ordinarily I wouldn't sell off my silver with the price this low, but the bank is running out of money. So I need to cash out so that the bank doesn't end up selling off loans as a result of a cash crunch. Alright, so now I'm going to sell short wheat. And do we have our sweep function still on? Okay, so this will repay my loan automatically. Alright, so I'm going to go back to buying the options. And if I didn't already have gold, I would buy more gold at this price. But we need to get these options done before BP's price goes up too much more. So we'll finish buying options till we run out of counterparties. We're already down to only buying 1% at a time. So it's pretty doubtful that we'll get to the put options. Call options are potentially more valuable, so we'll do those, and I'll be back in a minute. Alright, once again I'm interrupting what I'm doing because silver has gone all the way down to 14 and a quarter, and we still haven't paid off our loan for some reason. But I am going to buy physical silver. That price is just too good. And I still have plenty of cash left over. The bank shouldn't go into any kind of cash crunch depending on how much I owe in taxes. I'm going to owe nothing in taxes. I've already paid the full amount so far. So let me go back to Gold Corp and BP. I don't need to trade anything else, so I will buy some more options. Alright, so we can't do 1% of BP anymore, but Dayton Hudson is smaller in terms of market cap than BP, so now we're going to do options on Dayton Hudson. And I have no idea what percentage we'll be able to buy for him. Probably 2%. So I'm going to buy as many call options as I can on Dayton Hudson. And let's see, I can't even do 2%. Just got one in. Let's try 1%. Okay, so 1% at a time. And I'll keep an eye on the commodities in between our 5 transactions. If we need to do anything, we'll interrupt. Otherwise, let's get these done. Gold has fallen all the way below $800 an ounce, so we need to look and see who can afford to buy gold that doesn't already have it. I think most of our big ones here have it, but we're just going to go down the list and check. We've already got it. RakeM made money instead of losing it thanks to all those loans we bought. Alright, Cabot doesn't have gold, so let's have him buy it. That was $384 billion. So let's go over to the bank and make sure he's got enough cash. So I guess we're gonna have to stop there. We really kind of want to keep about 400 billion on hand for additional lending. And let's go ahead and sell off these consumer loans. Also some subprime. Let's sell 200 billion of this. Want to keep about 400 billion on hand in case one of these guys, one of our banking customers decides to borrow a bunch of money. Silver is getting up there. We'll need to keep an eye on that. If it gets above 30, we'll look to sell. And I don't remember if we got all we could on options of Dayton Hudson. I don't think we did. Let's see, he's trading, his net worth is $48 a share, but he's trading at half that. It's kind of crazy. He's got gold and silver. Making 730 billion on the silver, but if it's still going up, we want to wait. All right, so let's have Gold Corp buy some more options on him, and I think we're getting close to the end of our runtime here, so we'll probably finish up when I get done. All right, we've been interrupted by an executive memo. Corporate Finance Department is writing us about the improvement of underwriting ratios for casualty insurance. As requested, we've done some spade work on the concept you suggested, whereby the company would begin selling huge numbers of targeted insurance policies, hurricane insurance in Florida, earthquake insurance in California, flood insurance in the Mississippi Valley, at rock bottom prices no competitor can possibly match, with minimal downside exposure in the case of claims. Our analysis indicates the best way to do this will be to set up thinly capitalized Bahamian insurance company with a name very similar to MMF, and we sell cut rate insurance, and then if we get a bunch of claims, we basically file bankruptcy. Do we do it, yes or no? Now, Mitsubishi Fire and Marine, we don't own a whole lot of it. And I don't think he has much in the way of assets either. I think he's pretty small. We can go ahead and say yes. And of course, if we say yes, it'll hurt our karma. And we may want to keep our karma intact for when something more significant comes along, now that I think about it. So let's say no. All right, so we said no. We said no, and Tokyo's up. We said no, and we'll just save that for, we'll save that karma for something better. We still have to review those. But anyway, we're going to buy some more options here. All right, silver's up to 31.50. It's time to cover all of our positions on silver. So I'm going to go through and cover all of these, and then we'll sell our physical silver. And it's dropping in a hurry. Dropped all the way down to 22. I think we probably want to hang on to our physical silver until it goes back up. Crude got all the way down to like 115 and it's heading back up again. Let's have BP cover that so that he can take the profits from it in this quarter, because he declares in 1 week's time, and we will sell it short again or buy it depending on, well, we'll sell it short if it goes back up, but if it doesn't go back up and just starts heading down, we'll just wait and buy it when it bottoms out. So let's cover these so that we get a boost to our profits in this fiscal year. Should also help our options do better that we just bought. And that went down in I mean, that's just crazy how fast that went down. Okay, back to the grind here. We didn't even get a chance to sell it short when it was up there. Alright, I'm going to buy some more call options on Dayton Hudson, at least until I run out of counterparties. The price has been going up, and we're now offering the option, or trying to buy the options at $35 a share. And the price has jumped from like 1,100 million to 1,800 million for a single percentage point. And when that hits about 2 billion is when we're going to run out of counterparties, I think. So it shouldn't take too much longer. I guess his price is going down because silver's dropping and he owns physical silver. And so as a result, he's losing money on gold too. So as a result, his net worth is dropping. And that's why we're not getting, or that's why his price is going down. Both of these are heading in the wrong direction. Okay, I think we're running out of time here, so I think we're going to quit here, at least until these turn around on the options. And we're pretty much out of time for the entire episode, so we're just going to call it an episode here. We lost a little bit of money, not a lot, but pretty much all of that is due to our heavy investment in gold and silver. Those will recover. It's cyclical and we'll get it back, so it's nothing to worry about. We just happened to finish on a downswing. Interesting to see just how high up we got. We got up to almost 11 billion, or 11 trillion, I mean, at one point. Not sure if that was last episode or this one. Not sure what's the date on the calendar, October. So, as we go through the end of the year, things should pick up. As long as these don't drop any further, we'll be fine. And even if they do, we'll be fine. Because we can buy some more. We've got more companies that can buy it. But anyway, thanks for joining me. I hope you enjoyed it. If you did, please like and share. When we come back next time, we will go through the structure of our companies and try to put together a plan for how to have them all situated with the proper percentages. We want at least 80% of everybody. The only one that we don't have 80% of is Dayton Hudson here. I think we have 65% of him. And of course these ones in yellow, some of them we don't even control, like American Mobile here, I don't think we control it. And Labras or Telecom Brazil or whatever this one is, we only own a 25% stake. And he's in the same industry as Cabot, Global Telecommunications, as is American Mobile here. So we could just buy their assets if we had a controlling interest. Since Cabot only has a 25% market share, that would be fine to do, and then we could just sell it off. But we'll have all that figured out for next time. So again, thanks for watching, and until next time, this is RakeM saying, have a good one.